Welcome to my channel. It's another week, another weekly outlook video. As usual, we're going to start with DXY. For those people who are new, welcome. If you have not subscribed, please subscribe to this channel. So we're going to start with DXY, and today I want us to look at the 3 months. That's why I want us to start. So if you look at the 3 months candle, so this was January, this here was April, then July, and this is the current one. So of course, each candle is 3 months. It takes 3 months to print. And right now we have 2 months left before we finally close this candle. So where exactly is price at and where exactly are we headed? So you can see we had all this bearish move. Then finally, this is what we've had the month of that just ended, the month of October. This is what we had. So if you look keenly, remember we talked about trading ranges. Price is always going either for previous candle highs and low. So if you look at this 3 month candle, we have this previous 3 month high. Apart from that, we also have this fair value gap here. You see this fair value gap? So right now, our clear draw of liquidity is this fair value gap here. Before we proceed, guys, I want to let you know that the November bootcamp registration is still ongoing. It is a 6 weeks intensive program where the first 3 weeks will be focused on learning. You're going to have online classes, and every session is recorded just in case you miss. Then the other 3 weeks is focused on live market analysis, live trading, and mentorship. This is where you're going to apply whatever it is that we've learned. We are also going to do a lot of back testing, 5 years of data. So this is going to increase your confidence in the strategy and also speed up your learning through practice and repetition. So if you're serious about improving your trading and want proper mentorship, register for the November bootcamp. Check the link in the description. I'll also pin it in the comments section. You will realize that we are forming the TGIF of the yearly candle, okay? So you can see 3 months, we have 1, 2, 3, 4, okay? A year has 4 quarters. 3 months, 3 months, 3 months candle. And you can see the high of the year was this, the first quarter is when we formed the high of the year, okay? If you're going to work with TGIF, remember we said we want to form the high of the week either Monday or Tuesday. And in this case, we are forming the high of the year when? In the first quarter, which is the same as forming the high of the week for weekly range candle on Monday. Then finally, this is what you get. July, we have this low, and this is what we have. So this last quarter that we are in right now, this is like Friday, okay? So on Friday, what do you get? You just want to see the weekly candle is done printing, and we are just retracing or protracting to close the weekly candle, right? So that's the same thing. That's how I also look at this yearly candle right now. I think you're already done printing the high of the year and the low of the year. So right now we are just protracting to close the yearly candle. If you look at this is the year high to this low, you can see 30% is exactly here. It's really just nice. This is it. It's actually inside our fair value gap that we had marked as our draw of liquidity. So you can see that is where 30% of the range is. So this is good. So we do have so many confluence for this bullish bias that we have right now for DXY. So it's another month, of course. We have to check the monthly time frame. As you can see, this was September. This is what we did September. Remember when we started September, the month of October, remember I told you guys our bias is bullish and we were looking at this high here as the target. And yeah, so that is it. Our bias still remains the same. So if you look at the daily time frame, of course, we are bullish. We'll be making higher high, higher lows, higher high, higher low, higher high, higher low, and right now higher high. So at this point, and now you know exactly where we are headed. You now know our higher time frame draw of liquidity, which is the 3 months fair value gap here. This is our higher time frame draw of liquidity. So now for us to get there, of course, what do? We need to mark key levels that we see. So currently here we have this fair value gap. This is what we have. So first of all, we've not looked at the weekly. Let's just go check the weekly time frame. So if you look at the weekly, you can clearly see the only PD array we have is this order block here. So on the daily time frame, we have this fair value gap here, and these consecutive bearish candles. This is our order block, which you can see was tagged on Thursday, and then we got this bullish move. So I'm watching this fair value gap. I want to see price use this for more bullish moves. So let's look at USDCHF, and USDCHF we are going to start again with a 3 months time frame. And as you can see, we had this bearish move, and then we had this July, and this is where we are right now. So of course, clearly you can also see we have a fair value gap here. Okay, clearly you can see, of course, this goes all the way to this point here. That's okay. And then this here is an order block. Right here is an order block, and this is the previous 3 months high is right here. So of course now our draw of liquidity is this previous 3 month high and this 3 month fair value gap. That is our current draw of liquidity, and as you can see, it's in line perfectly with DXY. Remember, USDCHF and DXY are positively correlated. We want to see these two pairs behaving the same way, and that is exactly what we have here. Actually, right now, what we see, we are actually experiencing TGIF of the higher time frame. For those people, if you've not watched my TGIF video, I'll put a link here. You can go watch it. I'm looking at this as the low of the year. So the next thing I'm anticipating, we are just retracing to close the yearly candle. And if you take your fib tool and mark from this high to this low here, you'll see that 30% of this yearly range is right here. So this is a point I'm looking at a point where price will finally get to. So if you look at the monthly, this is October. So now we are in November again. Our draw of liquidity is this, and finally this fair value gap, and I'm eyeing this 30% of the yearly range. So let's look at the weekly time frame. And if you look at the weekly time frame, so we have an order block here, and I'm watching this price we can have a retracement all the way to this order block before we continue with the bullish move. And of course, you know what our target is. So let's look at the daily time frame. So if you look at the daily time frame, we have this is an inversion fair value gap, and you can see this inversion fair value gap is in line with the weekly order block. So this is a good point that I want to see price get to. And of course, you also have this tiny fair value gap here, which actually want to see this as a breakaway gap, but still we can still get a deep retracement all the way here before we continue with the bullish move. But the first key level that I'm watching is this weekly OB and this inversion, daily inversion fair value gap. So let's look at GBPUSD, and we'll start with the 3 months candle again, just like the rest. As you can see, 3 months GBPUSD, we have this fair value gap here. First of all, you can see we've been bullish from January. All this was bullish. We made a higher high and left behind this fair value gap. So it looks like we are retracing to an internal range liquidity. So for now, you can see already we have tagged our draw of liquidity for GBPUSD. So yeah, so this is what you have. So let's look at the weekly time frame. If you look at the weekly time frame, already price has tagged all our draw of liquidity. And right now we have this order block. So far, this is what we have on the weekly time frame. So if you look at the daily time frame, again, of course, I'm expecting, because DXY is bullish, we have not yet gotten to our target. I'm anticipating more bearish moves for GBPUSD because they're inversely or negatively correlated. So far, we have this fair value gap here, and we also have this daily fair value gap here. So first target is this first before we continue with the bearish move, or we might have a deep retracement to this before we continue the bearish move. So EURUSD will start with a 3 months candle, and you can see again EURUSD just the same as DXY, USDCHF, and GBPUSD. You can see we have a fair value gap left. 3 months, this is our draw of liquidity, but you can see we had a high, we made a higher high. So what is this? What is happening? This is just a retracement to this to this fair value gap here. And you can see for EURUSD, we still have more range to trade. Price has not yet tagged our draw of liquidity, and that's what we want. We want to trade pairs where price has not yet tagged our draw of liquidity, because that gives us range to trade. So we have this previous 3 month low as a target, and this fair value gap here as a target. So if you get your fib and mark from this low to this high, You can see 30% of the range is right here, exactly on this low where the fair value gap starts. So let's look at the weekly time frame, and on the weekly time frame we have this order block. So this is the only thing we have. So if you look at the daily time frame, so this is our weekly order block, and this is the start of the daily order block right here. Do we have a fair value gap here? No, we don't have a fair value gap. So this order block is a good point. You want to see price retrace, tag one of these before we continue with the bearish move. And of course, our target is 3 months fair value gap and 3 months, previous 3 months low. So I want us to look at the yen basket, and we're still going to start with the 3 months candle. So you see this is January. So April formed the high of the year, and you can see we took out the first quarter, which starts in January candle, and you can see, so that is the high of the year. So we have not taken out previous here high because this is a 2024 high in 2025, right? And this is 2024 low. So this is the high and this is the low. So we are still an inside. So this is an inside in terms of the yearly candle, okay? So this is an inside year, okay? So right now our drove liquidity is still this low, previous year low. If you're not going to close the year as an inside year, now you see the connection. Literally, price is fractal. The same thing we apply with the daily, weekly. When you look at even higher time frames, it's the same thing. So if we don't close the year as an inside year, this here is our drove liquidity. So let's look at the monthly. So this was last month, and now we're starting a new month, of course. So we have this order block. I don't think we're going to get a retracement to this order block here. So if you look at the weekly candles, so we have this order block here. That's all we have here. So let's look at the daily time frame. On the daily time frame, so far we have this fair value gap here, and we have this daily order block here. I want to see price use this to push price lower. So yeah, remember JPY basket represents the yen. If you're expecting bearish moves for this, you want to see a bullish GBPJPY, EURUSD, CAD JPY, and AUD JPY because they are negatively correlated. So let's look at GBPJPY, and we'll start again with the 3 months. So the low of the year was formed on the second quarter, which is the April candle, the start of April. So the same way with yen basket, you could see the yen basket, the high of the year was formed in the second quarter. And so this is 2024. So this is 2024. So we have not taken out 2024 high, and we have not taken out 2024 low. So it is still an inside. We are still inside, just the same thing as the JPY basket. So if you're not going to close the year as an inside year candle, our drove liquidity is what? Is this high here. So on the daily time frame, we have this order block here, and that's all I see here. So so far this is what we have. So price might tag this daily, or it might fail to target, and then we continue with bullish moves. But as of now, I want to see more bullish moves. So either we continue, or we can have a retracement. We tag this before we see that bullish move. So let's look at gold, and gold, this is what we have so far on the monthly. So we're starting with the monthly time frame. We have this fair value gap here. So yeah, so let's just mark this. In case we are done with printing the high of the year for gold, I see this as potential draw of liquidity for price. But for now, let's not get ahead of ourselves. Let's look at the weekly time frame. So gold, as you can see, price has tagged this weekly fair value gap, and we have not violated it, and we also still have this here. So gold is either we continue with the bullish move if you're not done with the bullish move, because you can see gold is at all-time highs, and we've just been printing highs, new highs, and new highs. So this is still a possibility, or we now might be retracing to tag this monthly fair value gap left behind. So that is the two possibilities I see for gold. So if you look at the daily time frame gold, you can see it's more clear. So this is where we are. We have an order block here. So either we use this order block to push price higher, and we want to see price invert this fair value gap here as we go high, or price might use this to push price lower. Okay, so let's look at US 100, which is also NAS 100. So far the weekly, if you look at the weekly, this is what we have, and we have this gap here. So yes, I'm looking at this gap as a potential draw of liquidity for price before we continue with the bullish move, because you can see we're at all-time highs. We keep printing new highs, new highs, new highs, or we might just continue with the bullish move and we fail to get to this gap here. So let's look at the daily time frame. So if you look at the daily time frame, so far what do we have? This here is the gap, and this is what we have. So we can use this as an order block sort of. But if you get a candle body, bearish candle closure below here, that would be an order block. But for now, this is not an order block, because remember, for an order block to form, we needed to have seen this bearish candle close below the open of this candle, but it did not. So we do not have an order block there. So unless you get a bearish candle close below, then we'll have an order block, which you can use as our new key level to see if you're bearish, price should use it to push price lower. So yeah, that's all I see for NAS 100. That is all I'd prepared for this weekly outlook video. If you enjoy these videos, please give it a thumbs up. If you have not subscribed, because I know 35% of you who watch my weekly outlook have not yet subscribed, please hit that subscribe button, and I will see you in the next one.